Hello, everyone, and thanks for being with us today at our PugliaTechs Talk February edition. This is Francesco De Lorenzi, one of the founders here at PugliaTechs, and we wanted to thank you, first of all, for being with us. Today's covering venture capitals, what they don't tell you, very hands-on session that we're going to start by thanking AULAB for hosting us today, and we'll be introducing Fabio Fedele, Head of Marketing at AULAB. So thanks for hosting us again.
Good evening. Okay. Good evening, everyone. It's a pleasure to have you here hosting this event. Let me introduce myself. I'm Fabio Fedele, the marketing director of AULAB. I know you are here to talk about innovation, so I don't want to take up too much time talking about AULAB, our track record, our history, but just giving a step back allows me to introduce a little bit more our reality. We started as a first coding bootcamp in Italy in 2014 with more than 10,000 students trained, and over the passing of years, our catalog expanded significantly with many innovation, especially in terms of AI, because we started only with a web development course 10 years ago. And now we extended the catalog with digital marketing, UX UI design, project management, just to give you an overview. And over the years, we kept the same method in teaching to our students, because our approach is a hands-on approach, immediately actionable, because all our programs were built based on the experience of the company, of the professionals. So we are changing a lot in the last 10 years, but the method remained the same. And I know you are not starting from scratch when it comes to artificial intelligence. But our gift for you today, as it's a great pleasure to have you here in our headquarters, is a free AI course that you will find on your table. There is a pin on the back of the card. In this way, we hope that you can use a little bit of prompt suggestion that are in the course, and you can immediately use in your day by day. And also you will have a taste of our method, so if in the future you will need a deep dive or you can need to train your team, your professional from scratch, or to level up their skills, we are here to serve you. So enjoy the event, and it's a pleasure to have you here.
Thanks again. So we see some known faces that have been following us for a bit more than a year now. Some are new faces, so it's probably a good time for us to introduce ourselves as PugliaTechs. So PugliaTechs is an association. It was born with a common challenge across us founders, across us as a micro ecosystem. Now you can say that we're getting a larger ecosystem, and this started as a challenge. And the challenge comes from a lot of great minds that have needed and still needs to move abroad to express themselves to the fullest. And these numbers has always not been something that we are proud of as Apulians. So with this perspective, we started organizing events in English, dating back to now September 2024, and we. In a very short time, we got great traction. The great traction came from the mindset that it is daring, but not too much, to consider Silicon Valley a mindset. So there's nothing that we cannot do to reach those levels with the talents and also with the opportunities that are starting to flourish here in Puglia. So the main point is the mindset that took us here, and it starts from a conglomerate of different types of minds, and minds that are on the professional side, that are on the business side, investors, corporates that are already believing in us, and institutions that are listening to us and that are interacting in this conversation that we're having across all parties. And this makes Puglia being the starting point, but not the ending point. So that's why beyond for us is very important. And it comes from the mindset. So the mission is to foster growth through a space where we can share knowledge, we can network, we can arrange events, we can build products. It's a little spoiler here, both online and in person. And the vision is to nurture a renaissance of Puglia from a technical perspective. And this allows us to drive regional innovation from the ground up. For this reason, we want to stay grassroots. We want to be an open source and an operating system, an open source channel for other associations also to join our mission. Quick story about us. It's now been 14 months. We've gotten great traction, great interest and collaboration across all of these hosting partners that have hosted us so far. Another great name to add today, AULAB. Thanks again for that. And as far as presence, we keep growing with the presence of 1,600 users following us and interacting with us on LinkedIn, 300 plus active on Telegram, and our website where we invite you to take a look and join our channels. But this is not something that we are aiming at doing alone. We want all of you to join us in this mission and tell us how we can help each other by creating networking opportunities and tools to achieve this goal. So we invite you to take a look at this QR code, scan it, and fill in the form and telling us how you can help us achieve your goals in making Puglia a global tech hub. So I'll just take a moment for you to take a quick scan of the code. Great. So now we discussed about what we're here today. So there's a lot of topics that revolve in this flywheel. The flywheel is creating in this case with AULAB, creating talents, nurturing it, creating business opportunities, attracting investors, attracting funds, both governments and private. So definitely venture capitals are a great topic, and we want to treat this topic with a very hands-on, unfiltered approach. That's why we have 4 great speakers that we're going to introduce today, starting with Marco Boll, Vice President of PugliaTechs and co-founder at Etna Research, and we'll be then moving to Paolo, Meola, Vincenzo Morelli, and Capobianco. So first of all, Marco, we welcome you here, and let's get our session started.
Works? Yes. Hi everyone. I'm glad that today we're gonna spend some time about the lies that VC are always sharing with people. I was not supposed to be here tonight, meaning we had a friend from the north of Italy coming and talking about VC and so on. Unfortunately, because of our airline strike, he couldn't make it. So the topic is still the same. It's just that the speaker is changing this time. I put together this deck just to give you more the harsh reality of building a VC backable business without any filters. So it looks like a negative presentation about entrepreneurship. Actually, is the key takeaway is going to be it's always better to know what are the problems you're going to face before you actually embark in a new journey. So the typical thing I heard when I was even raising for my startup at the beginning was always like, raise money, scale fast, change the world, and things like this, or variation of this. The main reality here is that you have to give up 20%, 15% of your company every 18, 24 months. You're going to get a very low salary in this journey. You're going to work twice like the average person in any, full-time job, at least. And you carry the risk. So that's really in few numbers what it means to be to run a business, run a tech business today. Now another thing that I think we underestimate, or people underestimate when they start a new business, is the failure rate. Now the numbers are definitely, the rule of thumb is 90% die. This is not just a rule of thumb, but actually is a stats that I got from various sources. And if we look at a little bit more about Italy, these numbers are like, let's say 50% in 3 years. So definitely when you start about it, you think about a new business, you have to think that, the odds are against you, in a nutshell. The other thing that is interesting from number crunching perspective is that in the US it's kind of similar number in terms of failures. The difference is there is different upside, for obvious reason. Now this is, I call it the funnel of death, but typically, when we think about VC money, it's always like, you have a seed round, that typically is the first institutional round, then you have the Series A, the Series B, the Series CD, but in general, already from C or D, you could have potentially a successful exit. So if you look at, this funnel and you realize that in order to reach a successful exit, you have 22.4 or 3% success rate from seed to exit, which is definitely, a very small number. This is something that, obviously VC that they don't want to signal this, but, if you think about when you get funding from a VC and they say, hey, I have this firm and I'm backing them, basically it's like 3% of the portfolio is going to be the successful one, and the others are going to be maybe exit, maybe like shutting down and so on. So they are not signaling what people think. That's very important to. So the takeaway here, first, a strong VC doesn't really matter if he's backing you or not, and second is the failure, that the death rate is pretty high, even if you start from a seed, which is the typical institutional round. So this is another interesting thing that we as a human always think in terms of averages. What's the average of an event? What is the average of getting money and so on? With VC money, is really about the median, because there is always an outliers out there that is going to skew everything else. So think about OpenAI, Anthropic. They are sucking, I don't know, 60%, 50% numbers that are outrageous from a VC perspective, because they are, the big, language model firms. So if you think that what is going to be the probability of getting money and what is the average ticket, it doesn't mean anything, because it's all skewed to the big guys. So what you care is what you can actually grab from the market, which is more into the median space. So the median deal is quite different from the average deal when we talk about VC money. And so this is very important to know. Now, when people talk about exit, we hear very different stories. If there is not a price tag, typically it's not successful. Like, the firm exited, successfully. What it means, right? Typically it means that they are getting a job, which is scary, right? Because you spend maybe 5 to 10 years, and then you probably get a very small exit, and you're gonna get a bump of an average salary. So, but the reality is, and this is something I learned when I was in November in Silicon Valley, and I spent some time with lawyers, and we're saying, well, the VC market is pretty much M&A. Nobody is gonna, a small fraction is gonna reach IPO. So what it means is someone is gonna buy you, and if 80-90% of these businesses are gonna be acquired, and that's why in the US is so big, because there is a lot of acquisition. That's the natural outcome of your endeavor. It's not the IPO. It's not, I'm going to run super profitable business, but it's going to be, you're going to get acquired at some point. And also there's some stats about, EMEA, which it means, 2% have an exit in IPO. So it's basically negligible. This is another thing that, especially when you start getting institutional money, there is always the debate or negotiation about what is the right salary I should get for, you know, this journey. Oh, I raised to $3 million, I should get 150 euro, 50 euro, 0, 75. I don't know, but I'm just giving you some numbers here. And the numbers are pretty much not too far from what you get as, let's say, senior dev in general in Italy. So this is the reality, and this is going to be your salary for many, many years. So again, you're going to work twice the hours. You're going to get similar package to a full-time job. This is another important point about percentages and the slice you get from running a business like a tech business. So let's assume there is one founder, 100%, is going to get a seed round, a Series A, a Series B, and it's going to reach IPO with 15% or something like this. Is not too far from the average case. So again, if you're lucky and you reach the IPO, you get 15%. Now you might say, well, you know, it matters, the dollars matters, right? If it's 15% of a 10 billion is a very different story than 100 million, of course. But again, it's very important to understand, you know, the dynamics of this dilution over time, because you start getting used to the fact that you get money, and then you realize that you have much, you know, a very tiny fraction of the business. This is a very, again, simple math to understand what you actually get, what you bring home after a successful exit. Now, I would say that $500 million is rather successful exit, and let's say that you have your 12-15%. So you know, on paper you have 60 million exit. Then you have, you know, taxes and lockup. Let's say you have 30 million. Now, if you assume that the typical journey is not 5, is not 3, is not 7, is much more, 10, 15 years. And what is the probability of getting this? 1%. Now, if you get, you know, the expected value, which is 27, you multiply by 1%, divided by 12, that you get suddenly what is the average expected value of this journey. Now, coming back to the point I said before, it's tricky to think in terms of averages, and it's a game of outliers. Entrepreneurship is a game of outliers. It's not true that the average guy is going to be successful, because it's not true. It's always a game of tail distribution. So the top 20, 10%, they're going to make it. The rest is going to be a very difficult time. But again, I'm not trying to tell you a story here. This is just crunching numbers, literally just crunching numbers. Now, if we go on the other side of the table, so people that are going to give you the money, you know, lots of storytelling. I mean, I've been in the hedge fund industry, which what matters is how much performance, you know, what is your performance, what's your dollar return. With VC money, it's always like, to me, shocking to hear, you know, the storytelling of funds, because reality is that the majority of them, they don't beat even the S&P 500. So you're basically investing in a fund that in 10 years is gonna, on average, produce you worse return than just buying an ETF of the S&P 500 over the last 10, 15 years. Of course, there is always the outlier, but again, who is gonna get access to the outlier? Very few people. The average VC fund doesn't beat the S&P, which is pretty much the benchmark for them. But they still get paid. So if you look at, you know, your side is, you know, you are struggling, you're going to get low salary, long journey. For them, they always make money, which is important to understand the incentives they have versus your incentives. This is probably the most negative slide here, because people always underestimate the human cost. Like, I start something new, you know, I'm strong. I can go through any challenge. I'm young, or, you know, I've been super experienced. The reality is that, and I can tell you that this number is not too far from the network I know, mental health problems is everywhere. Burnout is everywhere. Divorce, split ups, you know, it happens. It's real. It's not, and it's not like a small percentage. Sorry? No, I don't have statistics for that, but I'm just saying that it's very hard, that people are going to face mental health even if they are very strong. And the reality is that also the person that is next to you has to understand this journey. It's not an easy journey. One slide just on how, let's say, to reduce the risk of the things I've so far shared. First of all, this is counterintuitive with what we hear, for instance, in Puglia about public opportunities. If you have a startup, you should not have that. It's very simple. It's against any corporate finance textbook. But again, I'm not judging here. I'm just giving you the rules of the games to minimize the risk I said before. The second thing is, using a safe. What is a safe? A safe is just a contract. It's 1 page, 2 page that is saying at some points in the future we're gonna do a fundraising, and your terms here is that you're gonna get maximum valuation at certain level, which means I have no idea what is gonna be my business in 2-3 years when I'm gonna raise real money, institutional money. Let's just define a cap. So I want to get this basically a discount potentially, or not, depending on what is the cap that you define in the contract. Why is good? No lawyers. I mean, I live in UK for more than 10 years. I came back. It's full of consultants and lawyers. Reality is, for startups early stage, we shouldn't need the lawyers involved. It makes it rolling, so it's not like, oh, we're fundraising and everybody has to come to the same date. It doesn't matter. I mean, even myself, I've been doing rolling fundraising. It doesn't really matter with this kind of structure. And the other thing is, if in the US it works for 90% of the rounds, why the hell we should do it in a different way in Italy or in Europe? It doesn't make sense. Very few points here, because valuation. What is the valuation of my first? Numbers are all over the places all the time. Pre-seed, seed. So we just focus on the first rounds. What it means is that in the US is a pre-money of $3-8 million. In the seed level is $10 to $20 million, which typically is attached to a recurring revenues per year, which is not too high, right? It's $20K monthly recurring revenues. So this again is just some statistics. I'm not making any assumption here. If we look at Italy, of course, it's divided by 3. You talk to a venture capital here in Puglia or in Italy, it's like, pre-seed $1 million, if you're lucky. I heard so many funny stories here that, so for me, it's like, okay, doesn't make sense. We have to find a different ways, which is something, by the way, that we're working on with PugliaTechs. So just to wrap up, one thing is, first, try to bootstrap a bit at the beginning, because otherwise you never move. Just focus on safe, simple contract. Don't think about proper fundraising at early stage, because it's a drag some time and money. Don't think about valuation, because it doesn't mean anything. When you say, I raised a $50 million for a company that is making 100K per year, you know what? It doesn't make sense. From a low growth story is too high. Obviously, it's embedded the idea that you're going to make a lot of revenues over the next 2 years, but if you don't, it's zero. So don't force yourself in a situation that you basically are in the corner. Always optimize for M&A. You have to, the funny story here is always like, you have to give the keys to the buyer, which means you give the keys and you go. And end of the story. This is the way you should build your business in the software space. The other thing is, lots of people say, oh, you should go, triple growth and so on. It doesn't really matter, because we're all moving to efficient growth, which means it's not just growth at all costs. We pay to get funding. Is if you get the interest rates in US is 4% and so on, it's not important just to think about growth. You just really need to care about balanced growth as well. And the last thing is, protect your cap table percentages like your life. This is very important, because once you start thinking about, oh, I have an advisor, 50 bips there, 1% there, 3% there. That's not the way to do it. It's actually the opposite. So I've been pretty much negative. Now let's move to the silver lining. So let's be a little bit more positive for new entrepreneurs, people that are thinking about building a new businesses. So the first thing is if you are developing, if you're a developer, you know that agentic AI is a game changer. We've always been talking about this for now quarters, but it's actually real. And I can tell you as well, when I code, it looks like I have superpower now that before was so hard to do it. So this is a massive game changer. And in fact, Paolo is going to talk about this later on. You can build from Puglia and sell globally. It doesn't really matter where you live, because most of your sales process is going to be digital marketing. And if you need salespeople, they're still going to take a flight to meet people. The governance is very easy, it's very fluid these days. It's very easy to incorporate in the US with a C Corp, which is the standard. So it's not that difficult to do it as well from Italy. It's a little bit more convoluted, but it's possible. And the last thing is that obviously as a community, we're pushing to give access to this kind of information for free to everyone. So it should be a commodity. You shouldn't pay a consultant to know all of these things. It doesn't make sense. So this is kind of the last optimistic element of my presentation. So to conclude here, first, know your numbers, because it's a numbers game at the end of the day. Second, know your decisions based on the numbers. And third, build on your terms, which is very, very important. Now, without any filter, definitely the game is rigged. So it's against you. The odds are always against you. But at least you know the rules. So once you know the rules, you can decide to play it or not. Thank you very much. Should we do the questions, or maybe a couple of questions?
Thank you. Thank you for telling the truth, because normally people don't do it like you did. I fully agree with everything. I took some notes to your presentation as well, that US is very different from Europe, right? The capital, the financial instruments that you have there are like, this is different place to get money, to invest, etc. And but the fact about cashing from raising from VC, this is very hard. This is harsh reality. And second comment, what you didn't mention is that incorporating in the US has one more benefit. First of all, is GDPR friendly, because if you incorporate in the US, you can make your incorporation in the US administrator of all your personal data, meaning that the GDPR don't apply to you in Europe. You don't care, because there is a black area in the law, okay? Second, you have a lot of tax benefits, because if you're having your company in the US and then you have your LLC or Inc. anywhere in Europe, then you can literally claim back all the VAT and all the taxes through all your employees. That give you actually another 20% profit margin to your company. So just two comments why this setup is very good. So sorry, that wasn't the question. Just congrats.
No, but I mean,
on capturing the right thing.
Just to add, the takeaway here is that before everybody was saying, "Oh, I'm in Italy, I cannot incorporate in the US." It's super easy. The problem is, what is the tax man is going to do it with that? And so that you need a lot of optimization, and you need to understand how the tax man thinks. But it's doable. I have many friends who live in Switzerland, in Scandinavia, in Spain, in Italy. They have an Inc. They have a C Corp in the US as a holding, so they raise money from there, and then they have another company in Europe to do the operations. It's easy, not difficult. The important thing is to understand very deeply this concept from the beginning, because if you make a mistake, we can say we are on YouTube, so we're just few friends, but you're fucked. Anyway, next, another question, maybe there. We're gonna discuss your question later.
speaking about numbers, what do you think about AI applied to yes, to the the equation? You know, as AI is as a tool, as a
Yeah, I mean, just two things. The first, as I said, is from one end, you know, if the big LLM providers are sucking funding, so from the funding is
I was speaking about. Sorry for interrupting you. I was talking about the success rates of startups.
Mhm.
So
We don't know.
If we
don't
need,
know.
like my thought is, okay, if we need less money to build
Yeah.
a company, because we have an agent that does things, such a thing, then me, you, or anybody could build something, some company with a lot less money. And the question was, don't you think that the numbers written on the slide will change in time thanks to AI?
From a failure perspective, from like
success
building success. Well, no, not really, because everybody has the same. We're playing the same game. Before it was without AI. Now you have AI, I have AI. There is one customer, so we share the same customer. We fight in the same way. So I don't know. You think that because you are better using AI, maybe, but you have the same tools. So now building is very easy. Selling is super difficult, right? So the thing is, everybody has access. So if you ask me in 2 years' time, the failure rates, I have no idea. It might be that they are 99 because, you know, Anthropic is sucking everyone else, or not. I don't know. But I'm sure that, you know, if we share the same potential clients, we can approach the client the same way. So everybody is kind of moving up in the way of the sophistication, the execution, which means that we're still fighting for the same customers. So I guess, you know, the takeaway here is AI is going to help you if you are very obsessed about using agentic AI in your business, for sure in the short term, but we don't know in 2 years what's the outcome of this.
Yes, if we think about when computers came out to the public, it wasn't affordable for everybody to possess one. And as we went on in time, then everybody could afford a computer and use it as domestic use or company use. So if tomorrow these agents, this technology will be more affordable, then if everybody can afford it, then everybody will use it. And if everybody uses it, then something happens, definitely, because everybody has less costs on his own or her own company. And
but still you need to find the clients.
Yes.
So at the end of the day, the clients the pool is the same. We use the same tools. We try to reach the same clients. So we don't know, because it's just more difficult to get clients, because everybody says, hey, it's very easy to build a SaaS. Yes. Can you sell the SaaS? Is it easier to sell a SaaS? No. That's the thing that, you know, is like the levels is more complicated now because everybody has more tools. And so that's the, I think we're a little bit tight on time, so let's discuss later in the after session. All right, so now please.
First of all, thanks very much for the engaging questions. I think that's a great feedback for us. So moving to our lineup of speakers, we'll be now welcoming Paolo Meola, one of the co-founders of Guardian Studio, a venture studio that he'll be introducing. I'll be moving forward with our session. So thanks again for being with us today.
Thank you for having me today. So, thank you for just going here. Okay, perfect. So let me tell you a couple of things about myself. So I introduce myself. I have some. You have some background then. I'm a serial founder. So that's definitely not what I'm going to show you, but I can refresh because I'm going to use it later. Do you mind if I go from the? Do you have it here, or you want me to? Anyway. Yeah, it doesn't matter. You can use any language. But who cares? The point is, I have to. Can you click on the link I sent you without this? So anyway, um, just to give you a couple of information about myself, a piece of information about myself. My first company, I mean, my first successful company, was started in 2015. By the way, Marco was one of the early angels. So, and he also made some little money. He should have exited later because my investors made more, but he saw that first opportunity, first window. So I'm sorry for you, but you could have made like 3 times the money. Exactly. I didn't know how to use the money, and my even the first one. But that's not the link. The same?
Yes, Gem. Nice.
I may have sent you something wrong, but okay, I will fix it. Don't worry. Anyway, and I started in 2015 basically with a product that had the goal of digitizing the small medium enterprises in Italy. And the tough part was selling, by the way. So just like Marco said, the tough part is always selling, is the adoption of the end user. Anyhow, somehow, 5 years later, so flash forward, 2020, I sold the company. So we grew pretty steadily. Now the company is called Instilla. Now it's a consulting agency. So we had to switch from product to consulting. Even if we had a lot of technology back at the time, and that company still has a lot of technology. And I played the game, the VC game. So I raised money, I grew, I raised more money, and then at a certain point, I had the opportunity of selling my shares. First problem, that's Italy. So we were able to sell the company with a pretty decent for a pretty decent amount of money. Still, that was proportional to our revenue, proportional to our EBITDA, proportional to the multiples of Italy. So once Marco was talking about the numbers of the numbers, so the valuation of a company, saying that the investors are willing to give you a valuation of, I don't know, 1 million for the beginning. Of course, that makes sense because you're not going to sell it for like 100 millions. Those 500 millions exit Marco was talking about. I mean, I think we don't know many in Italy. The companies I knew were selling for a big amount of money are in the range of 10 millions, 20 millions, but that's it. So we don't have those numbers. So from an investor perspective, I understand why. So let me think it from the founder perspective. So let to go on with the story. I had this money. I didn't know how to use it because that was the first time I had some money in my life. And so I decided, and it was COVID, so I couldn't go out and have fun with that money. So I decided to basically invest in startups. So the worst financial decision ever, because you basically lock your money in something that you don't know what's going to happen. Luckily, I became a shareholder at AULAB, this company, and I had an operational role. So for a while I've been there, let's say, ad interim chief marketing officer. I was able to help the company grow. We went from 400K in revenues to 3 millions in a couple of years, and we were able to sell the company once again to Multiversity. That is the vehicle of CVC, of a huge fund, and this huge fund had a certain amount of money to enter the digital coding learning business. And so in that case, I cannot talk about those numbers. They were good numbers, but they were not proportional to the EBITDA. So luckily, I was not playing that game. They were not playing the game for the exit, because I mean, for a series of reasons, there was like let's say an auction, so different players willing to buy the same company, and so I had more money. And so what I did at the time, I once again invested in startups. So worst decision ever twice. And with that money, so back to today, what I've seen, basically the numbers Marco were talking about are real. So I spent a lot of money in funding companies that are not even, I'm not even saying they are going bad. Some are, like this year, I have like 70K in write-offs, and for a small investor, it's not a cheap amount. It's not a small amount, but like I have 70K in write-offs, and some companies are going decently. But what I'm talking decently, since their market is Italy, they're making 300K, 500K, 1 million, 1.5 million in revenues. So out of those companies, I won't ever make any 50x on my investments. It's very unlikely that I will make any big return on those. And since I'm a small investor, most likely as a financial decision, that was not the right idea, because it's like, I couldn't differentiate my portfolio. So getting back to the things Marco were talking about, those are the numbers of the VC game. If you're a founder, if you want to play that game, probably you're not in the right country. Marco was talking about you can start stuff from Italy, from Puglia, and raise money. I don't believe that's true. So if you want to play that game, you're just not in the right continent. You have to move to the US. I've been there. I know how things are. I studied there. I've worked in a venture capital fund there. It's another game. It's not another game. So if you want to play that game, it's very unlikely that you can play it here. So what I thought after 5 years, 10, now it's like I started working in the industry, on the innovation industry, in 2011. So like almost 15 years of playing this game, and I think I'm one of the lucky guys that can tell a story of, it's not even a huge success, but if you talk with 90% of people won't tell you that they sold their companies. It's very unlikely to find someone that sold their companies, even if I didn't make huge exits. Still, what I learned is that game in Italy, at least for me, cannot be played. So if you want to play that game, you have to find different valuations, opportunity exits that you won't have here, markets that are faster in adopting technologies. So you're just not in the right place. Still, I think there's another game you can play. As an investor, I'm not a financial investor. I'm an operational investor. So during the past 5 years, I started working with companies, the companies I've invested in, and I will say organically, randomly, I slowly created what is my model. That 2025 I had to change because of the AI, and I will tell you what. So what I noticed is, at least if you play the Italian game, you won't be able to sell the company for more than 5 millions, maybe. So maybe, in my opinion, I just don't play that game. I just don't play the game of let's go international and let's be crazy and sell the company to Microsoft. But let's play the game of, okay, I'm starting small, I'm making something that can reach 1 million in revenues, be sold for 1 million, no more, to some other companies that may be acquired by the private equity industry. So there in Italy, for example, there's a very interesting private equity market. So, but it basically doesn't touch the startups, because they start from 5 million in revenues minimum. So I would say more in the 10, 20 million in revenues. They count in EBITDA, but for me it's like let's talk in revenues. So my goal, since I've seen that happening, those companies willing to sell their company to someone else, to a private equity or to a bigger company, usually are trying to aggregate revenues, or they are interested in acquiring technologies that can increase their multiples. So there's a small market of companies that can be sold for 1 million. Of course, I'm not investing in such companies for not even 1 million valuation, because it doesn't make sense. So if I play that game, I want at least 20% of the cake. But I'm playing another game, so I cannot play the game of 2.5% exits, 90% failure rate. I need to play the game of 1 in 3 is going good, and the other 2 are still okay, because I cannot play that game. Probably because it's a too difficult game for me. But I decided that I'm not playing that game. I'm playing another game. And in that, now I'm a shareholder at 10 companies. So I've invested in 10 companies, about, I don't remember if 10 or 11, something like that. I had my first 2 write-offs this year. Still, the other companies are going quite well. Unluckily, they were not the companies I thought that they were going. I mean, I discovered that I'm not very good at choosing the investors, choosing the entrepreneurs. But luckily, I've seen that they're growing steadily. They're not burning money, and that's another important thing. So they are growing steadily, slowly, maybe 20-30% per year, starting from maybe 300K. So I won't play that game. It's very unlikely here. But still, like this year, one of those companies rejected 2 offers of sales to sell the company, and we're talking about 700K maybe in offers about 700K. For me, that I own like 15% of the company, still decent amount of money, having invested less than 10K plus my activity. So what happened this year? Basically, the game has changed, in my opinion. I will not play any game that is VC related anyhow, and the main reason is I think that any startup we can make will be destroyed by Anthropic or any of those, because any software as a service you may be willing to create, I mean, I can make it in a week, and if I can make it in a week, most likely anyone can. And so what I thought and what I'm working on right now is totally different. First, I'm not waiting for entrepreneurs to tell me their ideas and invest in their technology, in their venture. First of all, because I don't have that such a interesting market of entrepreneurs here in Italy. So most of the time during the past 5 years, I spent my time coaching young guys, very smart people that didn't know how to do anything. So I mostly I mostly gave my money and my time. I'm not saying for free, but in a kind of a charity game, I'm not willing to play anymore. So right now I said, okay, perfect. But instead of looking for a founder, let me validate the company first. Let me validate the venture first. Then maybe I'm going to find a salesman that is going to be a co-founder. So my goal now is let's find ventures, let's find projects that have zero possibility of becoming the next big thing, but are very likely to be profitable and cash positive from day one, that don't require any investment. I mean, investment that can be made through some marketing, but definitely not money given to Meta or Google. So some marketing that can be done with cold outreach, cold calling, LinkedIn outreach, and stuff like that. Focusing on B2B, because if you move to B2C, you definitely have to invest millions in marketing, and that's a game still that requires VCs. And I don't have enough money to play that game. So I need to play smart and play with a minimum amount of investment. And let's find a small niche that are not interesting for Anthropic. Small niche that are not that won't be wiped out Of course, it's very unlikely that I will make billions out of them, but it's very likely that, because I've seen this happening, that you can play with that. At a certain point, you end up with some interesting some small shares, like 20%. In my case, I try to have 80% in things that are somehow profitable, and then you see what to do with those. So I'm not willing to play the game of I'm running out of money, I need money. I'm willing to play the game of okay, let's go slowly, let's grow slowly. Also because this year, luckily, it's very easy to test anything, any idea, and to do that in weeks. In my case, I have a small team, 9 people. There are three doing marketing, 2 doing software development, 2 taking care of finance, like administration of finance and control, plus 1 for the public grants, especially here in Italy. You know, Marcos has never play with the public grants here. If you want to do a startup, I'm not willing to do startups. I'm willing to do small businesses. And what I'm doing right now, in the next 3 months, with my team, since we already help the startups we invested in with lead generation and development of small MVPs, we're doing the same for ourselves. So what I want to show you now in the next 3 minutes, no more, is the way I do to test small businesses that are somehow connected to what I was talking about. So let me show you this with a couple of Gemini gems. So let's imagine I want to let me give you a use case. So I don't know if you know that, like procurement departments in big companies have like 1,000. They have like 1,000, 1,500 suppliers, and they have to check one by one their registration data. In Italy, we have a lot of administration bureaucracy bullshit, like DURF. There's a lot of stuff, but you have to make sure that if you're a big company, like a big fashion brand, you want to make sure that each of your suppliers is compliant with all the regulation, because otherwise you can have a lot of problems. So I know, because that's one of the projects we're following, that basically there are companies spending 70K, 100K, paying people to open up PDF files one by one and check the compliance. It's not a huge market, because in Italy there may be, I don't know, maybe 500 companies having this problem, and it's a very Italian problem. I mean, to connect it to the Italian regulation. So it's very unlikely that I will have some players from the Silicon Valley willing to wipe out this small market that maybe as a, I think the total market is like, I don't know, some millions. We're talking about 5 million total addressable market. So probably not that interesting for anyone. But let's imagine you're able to get it. And let's imagine you're able to get it, and it's small. Maybe you just need 10 companies, and they're giving you, I don't know, 50K per year, of which you have 80% margin. That's not the game of the VC. That's not the VC game. But you can make a decent amount of money. So let's see if that's something that is testable. So let me just prompt stuff here. And I will start from the value proposition. And I created some gems just to speed up this validation thing. So right now, let me... Okay, thank you. Thank you, that's very nice. Okay, let's say I want to make a business that solves the problem. I'm just even talking, solves the problem of procurement guys having to check PDFs manually to see if the suppliers are compliant to safety regulation, let's say. I'm just playing. I'm not even talking much, but let's see what happens here. Why that's in, okay. Anyway, he's talking in Italian, but the solution is going to be in English. Do whatever you want. Let me see what happens here. So this guy, whatever, is going to send me a value proposition. Programmer, blah, 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 fragment. That's the problem. That's the solution. AI power advanced OCR, LLM based automation, some bullshit. Key benefits, risk mitigation, operational efficiency, proactive monitoring, primary users, procurement managers in big industries. So it's just telling me what is going to be my value proposition. I just take it and I plug it to my landing page generator. This guy is following, for example, the framework, sales framework. It's called The Sales Pitch by April Dunford. I would suggest that you read this book because it's very interesting for creating marketing materials that works. Blah blah blah. In this case, he's asking me what I think about the industry and do whatever you want. Let me keep playing the game. Whatever. So thank you for having created my landing page. This landing page is meant to show the problem, the solution, the benefit, the usual stuff that any marketer can do for you. Of course, the quality is not the same as you were like the top quality marketer, but now we're just talking about testing. So thank you for this. Let me just take it and plug it in this, for example, email generator. Let's see what it does. I think it was I decided that it's talking in whatever. English, please. Okay. And in this case, we can generate very quickly, hi, whatever, most procurement teams, blah, 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 or hi, whatever. This kind of stuff can be easily sent to all the LinkedIn contacts, the LinkedIn people. You just pay. If you want to do manually, you can still do it manually. You pay for a sales navigator, and you can send this kind of stuff to your potential customers. If you don't want to do it manually, you have tools that are automating this stuff. You can even send out. You can even send stuff that is not only, let's say, customized with the name of the company. For example, stuff I'm doing right now, you know, API. Okay, API is the tool you can use for scrape stuff. Now, I'm not talking about the compliance of what I'm talking about now with the regulation and GDPR regulation. I'm just saying, if you happen to go on API and look for LinkedIn scrapers, there are LinkedIn scrapers giving you out all the emails of your prospects. You say, okay, I want procurement people in this area. You can have it pretty quickly. You have it pretty quickly, and you can send out and test very quickly. Like, let's imagine you send out 5,000 emails. If you have something like 50 people that are interested, like 1%, based on my past experience, that means that this industry is interesting. So you can test at the same time 10, 20, 50 different business models. Once you say, okay, this one makes sense, you can then spend time in refining value proposition, making interviews, and so on and so forth. The nice thing is that nowadays, this kind of project I was talking about, you can steal it. So please do that and send out emails to solve the same problem. The nice thing is that to sell this kind of stuff, you don't even have to develop anything. Or even if they ask you to have some proof of concept, you do that with Cloud Code in maybe 2 days, maybe. If you do the basic thing, just like is a Python script that loops over folders and check that and creates Excels. So my point is, we're living in a country that is full of inefficiencies that can easily be solved with pretty much zero effort nowadays, like from January. from let's say from January 2027, from Opus 4.6, most of those problems can be solved with zero effort. Most of the marketing I'm talking about is just like knowing the right thing to do, knowing how to validate stuff. And then, but it's not like paying Meta or Google millions. It's like I want to validate that. Next step. So in my opinion, the point is finding small inefficiencies, try to solve them. And that's the way you will not make a startup. You will not make the venture the next billion thing. Very, very likely, I would say impossible. But you can have slightly interesting returns. So that's my marketing time, and I'm leaving you the floor to someone else. What I'm looking for here right now is entrepreneurs, people willing to do basically the sales guy in these ventures. So instead, if you don't want to play the VC game, the crazy VC game, together we can play the let's try to solve problems and make money out of them from day one. If you want to play this game, I'm here for you, so just text me.
Thanks very much, and also thanks for this this insightful real life experience. I think nowadays where there's so much abundance of information around AI tools that sometimes we don't know which one to start. So having something really tangible with a face can give us some immediate takeaways from tomorrow on. So yes, so it's amazing. Thanks so much. We'll be using that working session for questions so that we can continue. But thanks so much for the presentation. Great. So before we move to our Q&A with Vincenzo Morelli, we wanted to take a few minutes of your time to have a live engagement. So we are on a mission to pursue the goal of making Puglia a global tech hub. We're very ambitious about what we have in store for 2026. There are some rumors about something big happening soon, but we want to get to know you guys more and see who you are and what we can help you with. So if tech is on my side, I think you should be able to interact. I already see the responses, so that's a good sign. I think showing who you are already shouldn't affect the results, so I'll probably at this point let this automatically update. Interesting. We have abundance of founders. Great. Interesting. This is a commercial tool. We can't blame it on AI hallucinations. So, but interesting. Great. So, I think we have some. Okay, there's still some movement. I think. Hey guys, if you're hacking it, you know we don't know anything. So. All right. So great to see a lot of founders. Tech is battling with products and others. We're very interested to see what others means. So networking will definitely help us. Now, next question is, what are you here for? So are you for practical takeaways? Are you for the networking session we're going to have afterwards? Are you looking for opportunities, both on finding talents, finding job opportunities, or are you here to buy and sell services and products? All right, let's see what's happening behind the scenes. So I have no idea what's happening, but at least the numbers are telling us something. We're asking Marco, our man of numbers. At least the relative numbers should tell us a sample, even if the percentages are a bit beyond 100. Okay. Well, that's great. And finally, what about the topics? So what we do, we usually have business and tech track. In this case, it's more widespread on Q&A and specific sessions, but always look at tech talks and business talks. So we're curious to see what kind of topics you're interested in, and we could be focusing in the rest of 2026. So let's see what kind of percentages we have. Okay, the same. Oh, no. No problem. You can tell me. No problem. Oh, okay. Oh, for sure, for sure. Let's. There we go. You guys can continue. Should be able to scan here. You good? Perfect. So, no problem. Great. So apart from the percentages, which are very promising. Okay, okay, great. Well, thankfully we have the raw data, so we should be able to reverse engineer what's out of this. But thanks very much for your participation, and this is very precious for what we have in store. So stay tuned. Great. So as we discussed, next session is with Vincenzo Morelli, one of the co-founders of 2ED that we'll be welcoming here on stage. So there we go. Feel free to be on this side so you can be at the center. So first of all, thanks for being here. It'd be great for you to introduce yourself, who you are, and what is 2ED, and what we can talk about today.
Hi everyone, I'm Vincenzo. I'm the co-founder of 2ED. 2ED is a startup that was born in Puglia, here in Putignano, in 2021. And we started when we were not here, actually. I was abroad. My co-founder, Giulio, that is not from here, was in Florence, and we decided to come back in Puglia in order to found a company and to start this journey. So thank you for having me here, and today I will try to tell you what's my story, which are the steps we are taking right now to running our business, and hope to be helpful for all of you.
Amazing. So let's start with your background. So what is your background, and what problems is 2ED solving? What led your background to get there to what you guys are solving?
Okay, I'm the technical co-founder because we are two co-founders, and I'm the technical one. Giulio is more focused on business and commercial part. And I studied artificial intelligence at Pisa University. Then I moved to France for just a couple of months in order to do my thesis and start working in a company, but the job was not satisfying. So I decided it was COVID period. So we were discussing about a business idea. We tried a lot to create our business when we were younger. And we decided to try to solve the problem of the product on the shelves in the supermarket. If you remember, during COVID, there was no product on the shelves. Everyone was trying to buy butter, to buy pasta, and it was funny because in France, there was no toilet paper in the supermarket. And we tried to run to the supermarket in order to buy toilet paper before everyone arrived. So I was studying and I was approaching time series forecasting models. So I decided to try to make a model in order to solve this problem, try to predict the demand into the supermarkets. So basically we were passionate about startups, so we read a lot of books, and we started to validate the idea in 2020. The 4th of October 2020, we decided to move in Puglia because we found 3 customers that gave us the possibility to start with their data for free, of course. And they said, okay, if the model works, we're going to pay you. So we started with the project, and the function that we used in order to solve the problem was the 2ED at the beginning. So we decided to take the Italian version of the name and found 2ED, the company. We founded the company in April 2021, and from that moment the journey started, and we took the first customer, and was a supermarket chain from Bari. Actually, there was Numeri Primi. I don't know if you know the chain here. And yeah, from the moment we started the startup phases, or the real phases, in which we tried to find money, to find money from business angels, because we wanted we don't want VC at the beginning. We decided to start with people that believe in entrepreneurs. We didn't have a real traction at the beginning, so we decided to start with business angels. And actually, we raised 200K from people from the north of Italy. We we were not able to find investor here, even if we tried to find them. But but actually, I will surprise you, because right now we have investor from here, and so we started with this money, and LinkedIn played a key role in this research. In fact, with LinkedIn, we were able to contact 600 people, and only 60 people answered to the message, and 10 of them invest in the company. From that moment, we started hiring people, hiring the core tech team, and we developed the real product, and we start to scale the product. We took our biggest customer, that was Conad, from the northern Italy, the supermarket in northern Italy, Lombardia and Emilia, in 2022. And from that moment, the company started growing till July of the 2025, in which we raised 3 million with VC, and another phase of our company started, actually.
That's amazing. And sorry for the theater here. So what kind of metrics led you to actually reaching VC funds? What was the moment? What kind of metrics within the company led you to that moment where you opened to this opportunity?
Actually, you have to think which game you want to play. And if you want to play the game of the startup, you understand that there is a moment in which you have to change your type of growth. We started the second year, we had 100K of annual recurring revenue in the second year. That is quite good for Italy, but we wanted to change something. And in October 2024, we were almost cash positive. So we decided to change everything, to launch other 3 products, to hire more senior people in order to reach other segments of markets. So we launched other 3 products. So when we contacted investors, VC, we had almost 800K of annual recurring revenue. And we were almost cash positive. We said, okay, we have to change something. We want to scale faster. And that's the VC, that was the moment we decided to contact VC. The raising process was really, really tough and long, because it took like 9 months because of negotiation and other different problems that you have with term sheet, with contracts, and so on and so forth. So what we closed around on July of this year, and right now we started hiring more senior people. We are 40 people right now, still growing. But we, even if we are playing the startup game, we don't want to play the San Francisco startup game, because we have to admit that we are in Italy, and we are selling to Italy. And as Marco said, you have to know your buyer, and is not you cannot expect 200, 500 million exit in Italy. You have to think concrete. You have to be concrete also with your investors. Some investor told us, oh, you are too concrete for us, but you don't have to sell the dream that you cannot reach. We are discussing the new business plan in these days, and I can assure you that it's difficult to explain the fact that you have to aim to a good exit, a real good exit in this market, but you cannot be the next OpenAI, because the market is not giving you this opportunity. So when we started to build the new product, we are focused. We divided the different line of businesses, and we are very careful with the margins of each different product. We know when a product is profitable. We know where a product, when we have to do R&D, we are in the next step. We are changing our company structure in order to be more scalable. Scalability means also margins and revenues on different products. You cannot only sell a dream to them.
I'm too old. I'm a former startupper, but I'm doing every 5-6 years a startup now. I'm in wine business, but I come from tech business. So it's important to design the competitiveness of the startup. So your technology fit very well the Italian product and distribution chain. So in this place, congratulations, very sexy tech. It's maybe too much, because if we want to establish a real successful startup in Italy, we need to think, starting from the technology, where is the market, where is our competitiveness? Now there is tourism, now there is food. Maybe here we can be very competitive. But I've been in Silicon Valley in 2002, I've been in Stanford, but it's a different environment. So we need to be realistic, but a little bit proud, because we need to sell the combination, the integration of new technology in old economy. So this is very competitive. Because Americans want to buy Italy, not like a dream, but something different. So I don't want to be so tech freak, because it doesn't work. There is no context, there is no capital market, there is no end user market. So if you want to change your life, maybe you need to born in Stanford or in Italy and move when you are so young. So that's why we are here. There is a lot of constraints, but these constraints are real opportunities. But we need to understand. So this is great, this place. But next time, I want to invite old people with the same mindset of Vincenzo Morelli, yours, and Marco Haboab, and then build something genuine, not just American sounding. No, I'm not criticized. I'm just to give some contribution.
Personally, I agree, and what I can add to this good point is that when you build a product, we had the opportunity to build product. We have customers that gave us data to build product to solve their problem. The product were built with the customer. I don't have an idea. I developed the idea. I gave to them the idea, and they said, okay, this is my idea. Actually, the other 3 products that we are building, the first product is something that can give you the exact number of what you need for each product in the source. For tomorrow, you need to buy 3 packs of Coca-Cola and put it on the shelf because you have that space, you have a promotion, you have to consider the weather, you have to consider an holiday, you have to consider a lot of things that impact in that moment in the supermarkets. So we started with them the environment. We started with them. We started from an algorithm, but the product is not the algorithm. The product is the service you give to them and the value you are able to create to them. If you have a sophisticated algorithm, but you are not able to create value for them, the product is useless. So the other 3 products that we developed started with the customer. We had an opportunity. The customer was so satisfied of our previous product that said, okay, I trust you. I need this, this, and this. I give you the money, and you can develop the product for me. So we were just like, we had the methods, the technologies, but the know-how was from the customer. So when we create, the customer is surprised right now when he see our product, And they said, okay, this is extremely concrete product that solves exactly the problem. It has not too much, a lot of dashboard, a lot of stuff that no one uses, as just what the customer really needs. And this is really important when you build a product or startup. And the other important thing is that the AI is arrived and is colonizing every sector, and is everywhere basically. You have to find something that is not only it has to deal with technology, but it's not only technology. And that's the point, the main point. If you try to put our system, you try to solve our problem with ChatGPT or with every other LLM model, you are not be able to do this, because it's connected to the real problem of the customer that only the customer knows. And you have the technology to create something that can be scalable, not only connected with technology, but with the customer needs. And that's something different.
Thanks so much. I'll quickly close with what you said. So can I assume that that's one of the top 3 tips you will give to a new entrepreneur in the product business? So if so, what will be the other 2, the top 3 suggestions you will give to someone starting, and then we'll be going quickly on rounds of questions.
Okay. But, the first one is try to find a real problem and to validate the problem. The network, we have the network right now. We have to use the network. We have to contact 1,000 people and talk with people. Talking with people is the most important thing. We were able to raise money talking people. We were able to solve the system to Conad because one friend of our advisor was a supermarket owner. We closed a contract with 1.8 billion company with this, just with network. The second advice is be concrete in talking with VC. Okay, you have to sell that in 5 years. You will you will reach 20 million revenues, 50 million revenues. Okay, you can do that, but you have to know that in Italy it's not possible to sell company to 500 million. Or I mean, 99.99% of company will not be sold to that valuation. So be concrete with them and give them trust. Let them trust you in order to understand what is the problem, what you are really solving right now, and which one is the real potential of your company. And the third one is don't work just with technology, work with people needs.
Thanks very much. So in the benefit of time, also for those who are following us online, we'll be running towards the final session, and then we'll be using networking session for all questions and interaction. So thanks for your understanding. So we'll be now calling our last speaker, Lucia Capano. I hope I'm pronouncing it with the right accent. Account operations analyst of Fahrenheit 2030. Thanks for being with us today.
Hi, everyone. I'm Lucia Capano. I'm account and operations analyst for Fahrenheit 2030. It's a strategic partner for startup and small businesses. We take care of everything, finding opportunities for your specific needs. We prepare all documents for you and getting the most money, especially free grants that don't need to pay back. We turn your ideas into real and workable projects through deep analysis and strategic planning, thanks our network of specialists and technical designers cover all of Italy. And right now we are focusing to major opportunities like Bando Tecnonidi in the Puglia region, supports innovation and technology development in Puglia region, for in small businesses and innovative startup. And the funding structure is a package combining grants and loans to support both investments and operating costs. There are spending limits, maximum 250,000 euros for investments and maximum 100,000 euros for running costs. For asset funding, comes up to maximum to 100,000 euros and covers 80% of investment cost, split equally between grant, 30% of grant and 3% loan. Instead, operating grant comes up to maximum 18,000 euros and covers 18% of operating expenses. It's totally 100% of grants. In this slide, there is a funding summary with the loan characteristics and the loan duration maximum 16 months. And what can you buy with the Tecnonidi? Investments, physical goods, intangible goods like software and equipment, furniture. Instead, for running costs like staff structure, employees, property, land, utilities, digital service, promotion like digital marketing, and consulting innovation. All projects must fall under one of the specific innovation areas. There are 3 innovation areas: sustainable manufacturing, human environmental health, and creative digital communities. Another opportunity is a Pre-Seed Plus Lazio. This information is from a previous edition. There are requirements like location and the office of a startup must be in Lazio region, and this opportunity is for innovative startup, small businesses in the Lazio region, in a sector like aerospace, life sciences, or blue economy. And how much money can you get? If you are a standard startup, maximum grant is 30,000 euros and can go up to 60,000 euros if you have outside investors. If you are startup and research spin-off, maximum grant is 100,000 euros. What can you buy? Equipment, consult, staff, startup cost, and other costs in this school will open very soon on March for more details. And thank you for your time. Scan the QR code for our website, F2030, if you are company or private. Later, for many questions or more details with another person of team, Erika Punziano, we are here for you. Thank you.
Thanks very much. So, as we thank you again for being with us today with your engagement, for breaking the pattern, asking questions. This is very important for us for building what PugliaTechs is next. And when it comes to that, we talked about the point that we're not only building communities and events, but we're also working on the product side. So we have a little preview that will be going public tomorrow, I would imagine. So the first introduction will be today from our President Marco. So there's a new product that was built from PugliaTechs. So I'll just pass the word to Marco and start with the introduction.
Okay, so if you can go, okay. this is for tech-savvy people. So this is polpo. Basically, we eat the polpo. This is an open source application that allow developers to monitor and control the agents on their PC. So you can start, for example, an instance of Cloud Code or Gemini or Codex or OpenAI Codex, and you can leave the desk. You can go to the shop to buy the pasta, thanks to the algorithm of Vincenzo. So we can monitor the operations, the activity of the agents, the dedicated agents that we are using, and you can take the control of the instance from your phone, and that's it. It's really simple. It's open source. We are releasing it under the MIT license, so you can try it, you can modify it, you can contribute to the development. So just it. Try it and contribute it. Thanks.
So thanks again. Now networking time, and we look forward to your issues using wording in the Git tech world, or contributions, pull requests, or please break that octopus and let us know if something can be done better. So thanks again for being with us today.